So if you have the stomach for a 30% or 40% drop in the gold price, if we do have some kind of a deflationary crash here, then now is an okay time to be adding to precious metals, because the longer term picture is just gorgeous for them. It wouldn't be a surprise to see $5,000 gold and $200 silver at some point in the coming cycle. And if that's the case, then the metals themselves are great to own, and the mining stocks will just go crazy. It'll be a run for the history books.
The gold market remains on track to end the year above $2,000 per ounce and rise to nearly $5,000 per ounce by the end of the decade, according to the latest In Gold We Trust report from the European investment firm Incrementum AG. JohnRubino is an accomplished former financial analyst best known for managing dollarcollapse.com. In this video, Rubino predicts a promising future for precious metals, with gold and silver potentially reaching new highs, enhancing their appeal as assets. Meanwhile, Rubino believes central banks are buying more gold and reducing their US dollar holdings. Global central banks have been snapping up record amounts of gold since the start of 2022, a trend that should continue as countries look to move away from an overconcentration of reserves in the dollar, according to State Street Global Advisors. Monetary authorities across nations made net purchases of 387 metric tons of the yellow metal in the first half of 2023, after buying an unprecedented 1,083 tons the whole of last year, the world's fourth largest asset manager said in a recent note. Rubino anticipates an initial downturn in commodities like oil and copper, but foresees a subsequent rebound in precious metal prices. While some rating agencies forecast silver price to reach $70 by 2030, the World Bank expects the metal to trade between $20 and $25. Meanwhile, goldseek.com recently posted on Twitter, gold may be poised for a rebound. However, we wouldn't be out of the woods completely until we take out $1,950. Just regaining $1,900/$1,925 would be an accomplishment. We are presenting clips of JohnRubino's insights from his recent interview with SOAR Financially. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
That the central banks of the world and a lot of other people are aggressively buying gold and dumping dollars. So, the dollar safe haven story may be one with limited legs, and it may be replaced by gold, which is kind of what's happening right now. The central banks of the world in the aggregate are dumping treasury paper and using the proceeds to buy gold. The amount of gold they're buying is really impressive lately. The last year, I think it was, I want to say 1,000 tons of gold got bought by central banks. And that's a very big number in the context of the gold market for a sector that wasn't even an actual buyer. It wasn't a net buyer 10 years ago, central banks. So they were net sellers. And now all of a sudden they're net buyers on a big scale. So it could be that, okay, the dollar is holding up, but capital is actually flowing into gold in a more telling way. And if those two trends continue, then, okay, maybe the dollar still does well against the yen or something like that, but it doesn't do so well against gold. And I think that that's the general shape of the future. And we just can't know the timing, whether it's 6 months from now or 5 years from now, that something like that plays out in a big way. Commodities are cyclical, so they usually get whacked during a recession, at least the first part of a recession. The normal pattern is that they, supplies get tight, demand is strong towards the end of a boom, and commodity prices go up. Then that demand evaporates when the economy turns down, commodity prices drop. And the commodity stocks go down along with the commodities themselves. And then the government comes in, liquefies everything in sight, and commodities take off again. So the commodities crashing part of the story is not a guarantee this time around, but it's believable. It's completely possible that we see oil go from $85 today down to $40, or copper drop by half. Those are the kind of things that happen. And precious metals tend to get whacked with V bottoms. In 2008, that happened. And in 2020, that happened, where stocks tanked and it pulled gold and silver down along for the ride. But then they bounced right back up. As soon as the government started cutting interest rates, everybody looked at the peak beyond the valley and started buying precious metals. So there's no guarantee that that happens again this time, because no two recessions are identical. And this could be something that's driven by rising inflation, pushing interest rates up, and currencies dropping in value. In other words, the 1970s scenario. So we could have an economic downturn that coincides with high inflation. In other words, we could have stagflation. And the last time that happened in the 1970s, the dollar just tanked and inflation spiked. And towards the end of the process, you saw this massive spike in commodities too. Oil went to record highs, and a lot of other commodities went up, and gold and silver just rocked. Silver went from a few bucks an ounce to $50 an ounce. Gold went from a few $100s an ounce to $800 an ounce, because the dollar was tanking. So that's also a possibility. So I don't know this time around. We've got a lot of 1970s vibes in the economy. So it might be different from 2008, 2009, which was a pure, no holds barred deflationary crash. This time it might be stagflationary for a while. And that might cause commodities to do things that they might not otherwise do. So it's a hard one to predict with any kind of an investment thesis attached to it this time. I think that precious metals are great things to own, even if you accept the possibility of a flash crash, just because with all the debt in the world, there's no solution in the longer term to all the debt we've taken on, but some kind of a currency reset that involves a massive devaluation of the major currencies, and then a return to a gold standard. That pretty much has to happen in some form out there. And that's phenomenally good for precious metals.
Rubino challenges the notion of the US dollar as a safe haven during global instability, showcasing gold's performance with a record high in Japanese yen. Gold prices had already hit fresh all-time highs for citizens of the second and third largest national economies overnight, with domestic prices for physical bullion rising further above 1,000 Japanese yen per gram in Tokyo and hitting 462 Chinese yuan per gram in Shanghai. Furthermore, despite stock declines, Rubino highlights that junior mining potential are notable discoveries in gold and silver. In the first 9 months of 2023, the company, First Majestic Silver Corporation, produced 7.6 million ounces of silver and 152,336 ounces of gold for total production of 20.2 million AGEQ ounces, or approximately 75% of the company's 2023 guidance midpoint of producing 26.2 to 27.8 million ounces. Meanwhile, Rubino anticipates the US dollar losing purchasing power due to rising debt and poor financial policies, which he believes will significantly benefit gold and silver. Let's get back to the interview.
The world of currencies is so perverse, which is to say that so many other countries are doing such a horrible job of running their economies, that whenever there's trouble in the world, money flows into the US dollar, despite the fact that we're doing a terrible job of managing our financial system and our currency. We're taking on insane amounts of debt. We're doing all the things that normally destroy currencies, in other words. And yet, if there's trouble anywhere in the world, even if the US causes that trouble, money flows into the dollar. Basically, that's because as bad as we are, the rest of the world is in many ways even worse. If you're in China or Brazil or Russia or Germany even now, you're looking at the US and thinking, wow, an island of stability. I got to get me a Miami condo or something like that. And so a lot of money flows into the US, and that buoys the dollar. And that makes gold behave less well in dollar terms than it is in the rest of the world. Gold just hit a record high in yen, right? And the reason for that is because the yen is falling. And that's how gold behaves. It protects you against a falling currency by going up in that currency. So you hold your purchasing power by owning gold. That'll happen in the US eventually too, because the laws of finance can be bent but not broken. And with all the debt we're taking on and all the other stupid stuff we're doing, the dollar will eventually start losing purchasing power in a disorderly way, and that'll be phenomenally good for gold and silver. But right now, especially with the geopolitical situation out there, when there are multiple wars in the world, wherever you look, there's chaos. And if you're moving money around, trying to decide how to invest it, when you see chaos, you look for safety. and treasury paper in the US is still the gold standard for safety. A lot of the junior gold and silver miners they're drilling, they're out there exploring, and they're coming up with some phenomenal numbers. I don't know if I should name names, but
oh, feel free. Like,
okay,
yeah,
Snowline, Newfound Gold for two, one Dolly Varden Silver. So there are companies like that out there that are drilling and finding really impressive resources. Nevada King Gold. And their drill results are coming out and they're spectacular, and the stock goes down. And so they basically the companies get better defined and more valuable, but their stocks drop. So they become, more of a bargain from two different directions. Their stock is falling, but the companies themselves are getting better and better. And let's say there's 10 of them out there. There's probably more, and some that I don't know about. But there are some out there that when things turn, when people get excited again about precious metals miners and the junior miners in particular, those are 10-bagger stocks. They will just take off and run. The sector in precious metals that is happiest right now is the royalty streaming companies, because when nobody else will lend money to junior miners, the royalty companies, which tend to be pretty flush, they're considered good credits and they borrow a lot of money and they have a lot of cash. So they can step in and cut brutal deals with the exploration companies that work out brilliantly in the next cycle for in other words, they get streams of gold and silver or cash from gold and silver on terms that are really, really favorable for the royalty companies. And so they tend to generate massive amounts of cash flow on the upward sloping part of the cycle because they cut such great deals at the bottom of the cycle. And this is the bottom of that kind of a cycle based on valuation.
Gold is expected to remain a reliable asset, potentially reaching new highs, while silver continues to hold its value. Analysts from Toronto Dominion Securities, TDS, are out with a research note highlighting how healthy demand for gold coupled with a future dovish twist from the Federal Reserve could see future gold prices hitting over $2,000 per ounce. Given these forecasts, how do you know the role of gold and silver evolving in your investment strategies? Share your thoughts in the comment section below. If you find this video informative, don't forget to your support towards our channel and turn on notifications to stay informed about our latest videos. See you in the next video.